Hi everyone, today we got not a lot of movement, tried to go higher early in the session, gave it all back, tried to rally end of session, finished basically unchanged from that pre-market gain here, started to sell again into the end of the session. You can see this kind of structure here, but let's take a look at all of the charts and see if there's any new information for tomorrow. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. In news today, we got Paul Tudor Jones coming out and saying the ingredients are in place for a massive blow off top in markets. And I think this is absolutely true as well. I do think we'll see a little bit of a retracement, just enough to garner that support for the massive rally into this kind of dot-com bubble era style topping pattern. And that's what he's saying here. Feels very similar to the dot-com bubble from 1999. And we've been talking about it on the SPX divided by M2. We are very close to that top based on that chart, and Paul Tudor Jones does agree here. That's what he's saying. Ingredients are in place for some kind of a blow off top. History rhymes a lot, and some version of that is likely to happen here. Something potentially as explosive as 1999, which ultimately did set up for a burst of the dot-com bubble, where we saw a lot of those stocks fall a massive amount. And we've seen a huge move really since the most recent bounce, 55% since the April lows. So it's been a huge run. This is going to come to an end at some point. I think we need at least just a little bit of a retracement in here, maybe retest this in here, something to generate a lot more buying. And then once that buying pressure comes in, then we'll see that move to the ultimate top, in my opinion, which is a kind of multi-month potential trade. But I do think there is a higher high to come. I don't think that we're going to go straight there. And he says this combination of monetary policy hasn't been seen since the post-war era, potentially the early 50s, where you have a pretty strong economy. He also mentions here the US government is running a massive deficit, while in 1999 there was a bit of a surplus, so kind of interesting dynamics there. I would argue that the spending is going to be bullish for the market, but it was also bullish in 1999, so I don't really see that working against the thesis. But he also mentions here, if you don't play it, you could miss out on some of the juice, but if you don't play it, you probably have happy feet and you'll be okay because last time there was a really bad end to it. Not saying that he's predicting a downturn necessarily. He does believe the bull market has more room to run before it reaches that kind of final phase, but he does believe it is a little bit speculative and those prices are pretty elevated. Moving over to fear and greed, 57 from a 53. Pretty big move there. Big step up off of this kind of same low around that 50 mark. Back into greed on momentum, greed on strength. Breadth still not really going with it. We'll take a look at it on the charts. Put call ratio fell to that extreme greed area. That is not usually a great time to be buying markets. Market volatility in neutral, safe haven demand continues to turn up as you would expect. And then junk bonds did not move here today at all, still in regular fear. Moving over to the economic calendar, nothing came in for today. For tomorrow, we are expecting consumer inflation expectations from New York Fed, Atlanta Fed GDP. Not really expecting anything over the next couple days. Fed minutes might have something. The big question is, do we get this unemployment data on the Friday? That remains to be seen, but shouldn't be a ton of data except for that potential for Friday. Moving over to Max Pain, we talked about it on the weekend video, but there are just a ton of puts down here at 655. That seems to be holding up price, at least for this week. Wouldn't expect it to fall too much. Still gives you a potential fall of about $10 to $15 or so, but not until the Friday session. If we were to fall into that kind of 660 area, we'll see. Put call ratio did come down a little bit, down to 2.5. We'll see if that matters, but tons of puts here at 655, and that should keep markets a little bit above that level. Moving over to the charts here, you can see basically unchanged after the gap up, but it did gap up about 1/3% here, so fairly bullish on that. You can see did give back all the gains early in the session, gapped up, didn't buy into this, came down. I put these trend lines on after market hours, so I didn't really trade off of them, but you can see this kind of structure here. It's kind of a rising wedge, kind of a lazy rising wedge here. Can't seem to get above this kind of peak area here. If you put these two together from Thursday into that Friday initial peak, overthrew it, sold off, hit that zone again in the pre-market this morning, hit that zone again mid-session. Then are we going to push through there? Are we going to reject from here once again? Momentum fading, RSI. This was the main thing I was watching all session. You can see these RSI peaks continue to get weaker and weaker. Triple divergence from the peak here on Thursday. Friday peak was higher and weaker RSI. Peaks today pretty much in line with Friday. Definitely higher than Thursday. Again, weaker RSI numbers. So We'll see if this continues to matter. That triple divergence does give me a little bit of pause, and then you can see on that daily chart, 71.83, not typically a great time to be buying markets at those really overbought conditions on the S&Ps. Then moving over to those tasty charts here, you can see that initial sell came down, almost hit the bullish trailing stop. Right now, this is still bullish conditions on the hourly chart. Almost made it back up to that second ATR band. Really didn't do much of anything. We're still kind of in the middle of the range. Sideways choppy since back here on the 3rd. So that Friday session, you can see we're pretty much in line with that trailing stop as well at 671.37. We're right there, 671.58. So very, very little movement on that hourly chart. Then looking at the daily chart on the Tasty charts is calling this another bearish candle. Acknowledge that we did gap up and we did have a higher close here. We're still within the same trading range between that 8 EMA and upper ATR band. So still bullish conditions there. But I did want to highlight the weekly upper ATR band, 670.42. We're already right on top of it. That has been resistance the last 4 weeks in a row. And you can see this flipped to bearish momentum now on the volume weighted MACD. Don't love that. Not typically a great time to be buying markets. This just looks like a peak in my opinion. Then moving over here to the Qs charts, you can see very similar thesis. Came right up to that Friday peak from the pre-market. Came up there, sold off a little bit, rallied through it, came back to it here in the after hours in that last candle in that zone. And then the same divergence on the hourly chart. Peak RSI was Thursday. Continues to show weaker and weaker RSI values while price continues to rally. Does not give me a lot of confidence. If I had to give this kind of a short-term structure, I would say something like this makes sense to me. From this zone here to this kind of mid area, we weren't able to keep these gains. You could also kind of give yourself a level above there, but I like this one. Marks this top, marks the recent top, marks these bottoms in here. And you can see this is starting to fade to the upside. This is a little bit of a rising wedge where you have these higher highs are not as strong as these higher lows, and eventually that is a bearish pattern ultimately. And looking at the daily chart, again, higher close, it is bullish, up 0.75%. Momentum did resume to bullish, RSI at a 70.84, again, pretty extended. Moving over to the Tasty charts, looking at that weekly chart, upper ATR band, 606.49, so we're already about $1 above that level. Are we going to be able to maintain those gains at that level? You can also see volume weighted MACD, already flipped to bearish pretty aggressively here on the weekly chart. This does not mean that we're going to flip to bearish immediately. You can see it here, flip to bearish back on February 3rd, bearish, 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 and then there on February 17th, we started to see that follow through into the bearish momentum. So it doesn't mean that it's going to happen immediately, but it does mean that it is likely to happen over the next few weeks, in my opinion. And then you can see daily chart, really no changes here, still between the 8 and that upper ATR band. Upper band right now, 610.73, so it gives you a little bit more room to the upside. We did not hit that upper band today. And we did highlight that before, hit the upper band here, didn't quite hit the upper band and sold. I was expecting a little bit more sell off of this Friday candle, but we ended up gapping back and rallying today. And you can see tech was quite a bit stronger. Bullish conditions, got close to that upper band. That last candle of the day did put you below the 8 EMA, don't love that. And you can also see volume on that, on the RVol spiking above the level on the sell candle. Not great information there if you're trying to stay bullish, but structurally, everything continues to show bullish, just a lot of overextension in my opinion. Moving over to the Russell and the Dow. The Russell once again came in and tested that trend line, the trend line we said that was going to be resistance, and sure enough, we rejected off of that trend line again, closed well below it at a 246.71. The trend line for today was at 247.47. Got a higher high wick, but closed back below the trend line. Momentum still says this is bullish. Are we going to be able to get above that and close? That is the big question. I did not bite on this because of that same kind of selling pressure we saw across the board. This was a zone of resistance. We've been watching it here, and it did reject from that area once again after touching it on Friday and then touching it here today. And then looking at the Dow looked really, really strong, and this was actually bearish on the day, closed negative, down 0.14 on the session. Huge volume on the previous session, big volume today, bigger than the average volume, and that was selling volume. So is this kind of a peak zone where we get a bit of a sell afterwards? That's what I was looking for. Maybe this is just kind of the continuation of that. It is taking a little bit longer to kind of get that sell back into a more normalized range, even if this is still a continuation on the uptrend. Moving over to the Mag 7. Mag 7 continues to chop in this same trading range. right at the highs of it now that we've seen over the last 2 weeks. It was pretty positive on the day, 1.67%. That would be a nice reversion back to bullish here. What I kind of thought was going to happen was more like this, right? You got a peak area, retracement, consolidation, retracement, consolidation. I was looking for this kind of spike down, generate some buying pressure, bigger continuation. This is kind of the move that I'm looking for over the longer term. Obviously on the weekly charts where you get peaked out, not a lot of buyers left. You need to have a big sell, suck in some buyers, and then you can regain that momentum to kind of a peak area. And I think that is certainly a possibility still over the longer term. Otherwise, nice bullish candle here today, still in the same consolidation. If we get the final breakout above this consolidation, you could say reversion back to bullish. But for now, this is still consolidation. It's at the upper ranges. You can also see we're still well below this SMA, which is starting to trend down on the RSI. Not a great indicator there either. Moving over to Microsoft and Apple here. Apple was actually down, still has not touched that all-time high. 260.10 starting to show as a major zone of resistance. Can't even quite touch it before rejecting. Every time we get even close there into that 259 area, starts to sell pretty aggressively. It's done that 4 or 5 days in a row now, and it continues to do it. Momentum is fading. RSI super overbought. Is this going to be a massive double top here for Apple? You can see it here. Huge top, another top in this zone. Is this going to be a zone of resistance for a second time? Continues to be interesting. And then looking at Microsoft, this is a very powerful candle, right? We said we were holding the higher low structure here, held the 21. We were holding bullish structure above the trend. Didn't even come down and test this zone in here over the last couple of days. Said this was all kind of bullish. We were looking for a push to here. Sure enough, it did push through there kind of a little bit after I thought that it would, but momentum back to bullish, RSI back to bullish. This will probably go another $10 in my opinion, up to that 538.25 level. That is my next zone of resistance, kind of the peak level here after the rejection and then that bigger sell over the next couple of weeks. And now we have bottomed out and rallying back to that area in my opinion. Moving over to Tesla and NVIDIA. Tesla had a good day, up 5.5%. Momentum stepping back to bullish. RSI still super overbought at a 65.5, and you can see it's below the SMA, generating lower lows. Don't love that while price is going higher, but structurally, this is bullish, right? You had kind of a long continuation rally after the big spike. Couple of days of selling. Buyers came in, gap up, rally. I would expect this to continue here. I still think this zone is in play as long as 414.50 is still support. There were some text messages or tweets from what I was tracking on X about Tesla and potential new products from Tesla, and this continues to kind of move off of that rumor mill. Usually rumor mill style trades do not last, but in the short term they can be pretty aggressive. And then looking at NVIDIA, there was news around AMD and OpenAI generating a partnership, and that was super bullish for AMD. I think they were up about 25% around the close, and for that you got NVIDIA down a little bit over 1% and came down and tagged what would have been my trailing stop. We bought the breakout here on Tuesday, rallied up, sold it here on Friday, and then we did go a little bit lower here, which would have been the expectation, right? You get a bearish engulf candle after a doji candle. Momentum stepped to bearish on Friday, expecting a little bit more sells. Question is, do we come back down and hold this kind of 184 area? Did you buy it in here at the support level on the retest? Definitely an indecision. Candles could certainly go either way. I don't really think that this partnership with AMD is going to take away from the massive demand that NVIDIA has. And you can see this is very much a bullish structure here in the short term. But of course, that 184 level is pivotal. Moving over to staples and discretionary. Staples is down 0.73%. Discretionary's up 0.86%. So is this a little bit of a continuation back to risk on? I still don't really think so. You can see this is still a clean double top in my opinion. We haven't really had that midpoint breakdown yet. I think this was just a little too aggressive here. We got a little bit of a kind of a dead cat bounce, kind of. Didn't really fall enough to call it that, but you can see two big red bars in a row, a little bit of buyers coming in, middle of the range. I think this will just continue to kind of sell off here, as this is going to be a topping pattern ultimately, in my opinion. And then you got staples selling, like I said, still at the level 77.50, closed below it 77.46, after hours 77.53. Is this going to be a zone where we find support? If this is truly a close below it, you should expect more selling here, so just keep that in mind. Next level is right around these lows back here from April, around that 75.40 level. Moving over to breadth, we got breadth moving lower on both of these. 20-day breadth moving much lower, down 7.6%, 50-day down 4.36%. And again, that is not what you want to see. Usually that means this rally is going to fail. When you have markets going higher and breadth going lower, you can see the momentum on 20-day stepping to bearish. That is likely to have some follow through. So I would say this most recent move is going to fail ultimately and push us to that kind of new relative low that I'm looking for. And then you can see it here on 50-day. This just continues to slowly stair step lower. You got a lower high here, potentially a lower high here. Looks like it's getting started to go. And then you got a low, kind of a double bottom in here. I think this will go to a lower low on that next move. Either way, breadth not going with the move, indicating there's definitely some risk underneath the hood. Moving over to the dollar, long dollar continues to be the thesis for my channel. For me on the trading side, you can see solid base, double bottom, higher low setup here on the Friday. Nice spike here on the Monday. Again, this is not bullish for equities, right? If the dollar is finding legs, that is usually not a good thing for equities. And you can see up 0.4 on the week, definitely good there. We're right at that 21 on the weekly, which is why I'm highlighting this here. That 21 has been kind of a zone of resistance over the last several weeks, but this looks like one of those weeks where we could get a nice push through there. I still believe we can go, and looking at that daily chart, looks very nice here. Rally up, higher low setup, 21 EMA is support on the daily chart. Above that 55 EMA today, closed above it. Potentially, we still have a little bit more time on it. I think we'll get that close above the 55, push to the 144, up around 101, get this nice continuation through here, up to that 144 EMA around 99.16, and then potentially that 99.83 area. Momentum back to bullish, RSI back to bullish, still long dollar, still believe that dollar is going to push here, which is bearish for equities. Moving over to bonds. Bonds didn't really move a whole lot. J&K unchanged on the day, positive just 2 cents after this big gap down kind of consolidation. Momentum bearish there, still kind of risk off in my opinion. Otherwise, we got TLT. This one's a little bit more bearish, big gap and fall through that 89.16 level. You can see it gapped the level, came back up and tagged it. High of day was 89.16, so tagged it to the penny and then came down and sold. After hours, we're finding a little bit of a bounce off of this consolidation low, but momentum bearish, RSI bearish. This is a high, lower high setup now, so this will probably pull back. Hopefully we find support in here around this consolidation of EMAs and SMAs around kind of 87.70 up to kind of 87.90, 88 area. But this is definitely a bearish setup in the short term. In the medium term, I would still argue bullish, right? With a low, higher low, higher low, high, higher high, higher high. Just need that higher low structure in here somewhat, and then we can get that bigger continuation up to that 92.82 area. Moving over to volatility, staying on the weekly chart here for a second, you can see the momentum step to bullish here. Not what you want to see on the VIX, right? And you don't really see this flip to bullish and flip back to bearish super often, right? When you have this kind of long, consistent rally here, flip to bullish, I would expect follow through on that. Is it going to happen right away? Obviously, not necessarily. This is still the weekly chart, still could take a couple of weeks to materialize. But usually when you flip to bullish on this chart, that is not something that you want to be long in that environment. So just keep that in mind. On the day, not a whole lot to say here. Was still bullish on the that MACD, still positive, step back down a little bit, still in this kind of same consolidation range. Still above all the short-term EMAs, above the 9, 21, and the 55 in here. So either way, still believe that this is going to spike up relatively soon. Moving over to my accounts, I did not do anything at all. I was bearish going into the week. If you watched my weekend video, I did not like the setup from the Friday into the Monday, so I was out, and then I expected some bearishness kind of Monday, Tuesday, because I wanted to see some more pullback off of that Friday, and then we just didn't get it. Gapped up right to my resistance areas, started to show rejection from there, did end up kind of rallying back into that zone, but everything just does not seem to have a lot of conviction, not a ton of volume usually on Mondays either, so I didn't really want to do anything with it, right? I have a little bit of a bearish bias. We gapped into a zone of resistance, didn't really show any conviction on a potential breakout from that area, so I just didn't do anything, and that's totally fine, right? It's okay to stay out of markets. The dollar position did gain just a few bucks, nothing crazy there. Dollar position should continue to go higher. I still believe this is going to be a winning position over the next couple of months. And right now, I just don't want to do anything. If we see a massive breakout and it has some volume behind it, and we see some continuing to run style moves, I'll definitely try to get in on that. But there's just a lot of factors, in my opinion, that say markets should ultimately be moving lower. Let me know down in the comment section what you think of Paul Tudor Jones's comments. Are we going to see a blow-off style top and a 1999 style top, which leads to some much cheaper prices over the next couple years? Or are we just going to continue to march up slowly in this kind of melt up we've been seeing? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.